The average home in the US is half of what it is in Canada. That is a huge difference from an affordability standpoint. So my whole thing is that why go out to these smaller areas or other provinces when you've got this country below you called the United States of America, where you have 10 times the size of the population size, 10 times the people. 30 something million people live in the US compared to 38, 39 million in Canada. So you've got a market of so many more people, cities over, population that much larger. Why not explore it? What's preventing you? So with today's presentation, I want to just impart something for you guys to consider the US. I'm not saying don't invest in Canada because I continue to invest in Canada. However, open up your mind to the opportunity that's before you to invest in the US, all right? And eliminate that border. I mean, the reality is Canadians are investing in the US. Why aren't you? But I think two of the most common concerns or hangups for most Canadians is taxes and financing. Hey, welcome to the Canadian Real Estate Channel. My name is Thomas Lorini. I'm your host today. I'm super excited to be here. So thankful for this opportunity. So lots to talk about. So stay tuned. If you don't know me, my name is Thomas again. I'm born and raised in Toronto, moved to California about 8 years ago. I'm currently investing in both Canada and the US. It's been a journey, and I'd love to share more about investing in the US over the last number of years. There's been a tremendous interest in Canadians to invest in the US, and I've gone through it. I kind of experienced all the heartaches and challenges as a Canadian, moving to the US with no experience, no credit, no tax returns, and all the challenges, all that good stuff. So I want to impart a presentation here, share a little bit of my knowledge, and hopefully you guys find value in that. If you don't know my background, we did record a session with Adam. Go check out that last video. There's some more history on myself, on how I got started in real estate investing about 12, 13 years ago, and basically how I've kind of migrated from single family duplexes now to multifamily, self-storage, and so forth. So again, I'm happy to be here today sharing all about investing in the US to all of you Canadians. So with that, let me start my slides over here. All right, eliminating the border. So I love this picture here. Canada and the US hand in hand. Too often, I think Canadians have this kind of this challenge. Something is preventing them to consider investing in the US. Over the last number of years, the market in Canada has continued to escalate. Price points have gone up considerably. Major city prices, the opportunities don't make sense anymore. You probably noticed there's cash flow is non-existent. So what has happened, a lot of you Canadians have gone to other markets across Canada, some of these smaller markets, Saskatchewan, Halifax, or further up north in like Timmins or Thunder Bay and so forth, which is great. However, the reality is those markets are relatively small. You don't have millions of people living in Timmins. You don't have millions of people even living in Thunder Bay. So in a smaller market, smaller opportunities, more competition. So the likelihood of the price points increasing is that much higher. When you have a lot more competition coming into an environment where the opportunities are not as plentiful, it's only going to kind of continue to push prices higher and higher, and really reducing overall cash flow opportunities and return on your investment. So my whole thing is that why go out to these smaller areas or other provinces when you've got this country below you called the United States of America, where you have 10 times the size of the population size, 10 times the people. 30 something million people live in the US compared to 38, 39 million in Canada. So you've got a market of so many more people, cities over, population that much larger. Why not explore it? What's preventing you? So with today's presentation, I want to just impart something for you guys to consider the US. I'm not saying don't invest in Canada, because I continue to invest in Canada. However, open up your mind to the opportunity that's before you to invest in the US, all right? And eliminate that border. I mean, the reality is Canadians are investing in the US. Why aren't you? All right, here's the United States. For those of you who don't know, I am a member and a coach and a partner with Wealth Genius. Wealth Genius is a group, a network in Canada, and now we are expanding across the US as well. So this slide here was a presentation from a presentation I did earlier this year. Some of you may have known I did a 2-day boot camp in Toronto, 2 full days of educating Canadians on investing in the US. And this is one of the slides. The vision, the idea is having members of the same group across various cities all across the US. Why? I mean, there's multiple benefits: trusted resources, potential JV partners, boots in the ground, opportunities. There are just so many benefits of having access to US people. And these are some of the markets that I'm focused on and that we are growing into. So with that, I kind of wanted to premise a lot of times the question comes up, you know, why the US? But really, is the US better than Canada? I mean, it's a very subjective question. Is the US better than Canada? Like, what do you mean, Thomas? I mean, there are reasons why I feel the US is better. From a personal standpoint, now living 8 years in the US, what do I think? Well, I mean, I live in California. The weather is a lot better than it is in Toronto. I have to say that. Healthcare, I'm like that. I'm as much as you guys may think free healthcare is a great thing, here in the US, the healthcare system that I've experienced has been monumental. Earlier this year, I had knee surgery. The service was top notch. I didn't have to actually pay for the surgery, and it was booked within weeks, something I never experienced back in Canada. People in general, I'm telling you, as much as people say Canadians are friendly, I find the people in my area here in Southern California to be very, very nice. In terms of just, we could walking down the sidewalk, people will stop and have a talk with you. They'll wave hello and so forth. I'm not sure if it's a cultural thing or what, but I find the people to be a little more friendlier. Taxes, just retail tax is just one of the many taxes we are taxed. From a retail tax perspective, I mean, here in California, we pay 8% retail tax versus in Ontario, what is it, 13%. Then you've got income tax. The income tax levels are lower in the US. So these are just some of the reasons behind it, why I feel the US presents some better things compared to Canada. Opportunities. This is, as an investor, much more plentiful opportunities. Here's an example. If you open up realtor.ca, we all do that. Open up the app and scroll, you know, multifamilies, you type in multifamilies, 20 units plus. How many properties do you think come up? Very little. The reality is very little. If you do the same thing with an app in the US, you open up LoopNet and you type in, multifamily in a particular market, you'll get dozens, if not hundreds of deals or opportunities for you to have access to. So from an opportunity standpoint, that is significant. That's huge. There's way more opportunities I find in the US than in Canada. So as an investor, that is a significant consideration you need to have. And then, of course, capitalistic. I mean, born and raised in Canada, I know how it is. The climate, it's a much more socialistic environment. The government regulations, the government step in much more than here in the US. US, much more capitalistic, pro-entrepreneurship, pro-business. So there's definitely differences that I've noticed. And in terms of government interference, yes, I'm not saying there isn't. However, in comparison, I've seen, even just through COVID, the challenges a lot of Canadians have had with the leadership over there in Ottawa, and all the rules and so forth. And it's been hard to kind of watch, but I've just been thankful that I've actually been where I've been on this side of the border. Economic differences, as I mentioned earlier, 10 times the size of the market, the US. That's huge as an investor to consider. You want to invest in a place where there are people, where there are jobs, and where there's money. And the U.S. is number one in the world in terms of GDP, $25 trillion compared to Canada. All right, so this is an interesting metric, and I'm not sure how many people in the audience actually know this statistic. So the national price of homes, the average price of a home in Canada, this particular slide was from earlier this year. The average home was around $800,000 across Canada, all right? And that's been steady climbing over the last several years. Pretty much, look where we started. January 2020, we're about $500,000. So it's gone up substantially over the last 2 years. But look at this slide in comparison. The average price of a home in the US is around $400,000. So think about that. The average home in the US is half of what it is in Canada. That is a huge difference from an affordability standpoint. The average price is $800,000 compared to the US, which is just under $400,000. So what does that mean? Well, if you combine that with the income levels, there's actually higher income levels and more actual disposable income in the US compared to Canada. So now you've got price points lower, more disposable income in the US versus a market like Canada. Well, look at this chart here. Disposable income in Canada compared to home prices is a huge gap. So this basically presents a risk environment. And Canada, unfortunately, has been in a bubble territory for some time. And this chart was prepared by a company called Visual Capitalist. And they basically assessed all the countries across the world. And basically, Canada ranked number 2 after New Zealand with the highest housing bubble risk. So this was from earlier this year. And we've seen now what has transpired over the last 6 months. So this clearly indicates that Canada, compared to the US, big difference. Canada, New Zealand, Australia, these countries were way off the spectrum in terms of bubble risk. So again, as an investor, you need to know that. A lot of people are investing in Canada without enough data, without the facts. So now if you have an opportunity, you're saying, well, do I continue investing in Canada or potentially diversify and invest in the US? Well, this is something you may want to consider. If Canada is in a bubble, in a much higher risk environment, why not diversify into another market like the US? And another consideration of why prices are higher in Canada is a housing shortage, livable land. So we all know most of the population live within maybe 100 miles from the border. The rest of Canada is really uninhabited. Immigration policies, just read today that government in Canada is expecting to bring in another 500,000 people, which is, I guess, is good in one aspect, but more people, more demand for more homes. And I don't think there's enough homes being built in Canada to sustain and provide all this influx of people. And interesting enough, Canada seems to be highly ranked for money laundering, which I just found to be an interesting fact. So in the world, in terms of the most affordable countries, look at where the United States ranks compared to Canada. The United States is number 2 after Saudi Arabia for being the most affordable country in the world. And where does Canada rank? Number 17. So what I found, going through this, they had a number of different things that they've kind of assessed, all the data that he utilized, and they assessed everything from price to rent ratios, rental yield per city. But what I found was the second last slide, the second last column on the right side, mortgage as a percentage of income. The United States, only 29% of the average income was towards a mortgage, versus in Canada, it was about 50% of people's income was allocated for a mortgage. That to me is something very, I mean, that's an eye opener. Something as an investor, you want to know if half of people's income in Canada is going towards a mortgage, don't you think that's too high? And how are they even allowing that? Versus in the US, it's not even 30%. So that's a huge indicator for me. And that's something I want to factor in when I'm investing my capital and where to potentially, moving forward and planning and so forth. Now, in terms of foreigners, I mean, Canada is ranked #1 in the world for foreigners investing in the US. So that is a good indication. Canadians are already investing in the US. So why aren't you? All right. So something for you to think about. It's not like no one's doing it. Yes, based on this statistic from about a year ago, 8% of all foreign buyers are coming from Canada. So is it logical to buy real estate in the cheapest country with a stable government and a solid economy? Something to think about. Yes, this year things seem to be shaky. We may or may not be heading into a recession if we're not in one already. However, as real estate investors, we have a firm belief that real estate is the best, one of the best, if not the best asset class to be investing in. So consider the US as well as one of your metrics as an investor. Another reason, I put this slide here is, why the US is there's more money, more deals, more value. All right. Investing in the US, there's a number of different reasons to invest in the US. And this slide is also something I want to kind of discuss a little bit. So I mentioned earlier about affordability. So the average home in the US is half of what it is in Canada. So from an affordability standpoint, you have markets where it's much cheaper to purchase a home. As I mentioned earlier, my first investments in Ohio, I was purchasing $80,000, $90,000 single family homes that would rent for $1,000, $1,100 a month. And those price points still exist in the US, just so you know. It's not something where it's like that was back in the day. No, that still exists. So something for you to think about. There are markets in the US that you can purchase a home for under $100,000 that rents for over $1,000 a month. All right. Diversification. You've got 50 states, 50 different markets. Each state kind of operates independently. They have their own set of rules and there's and variables to consider. So again, much more diversity compared to Canada. Reduced exposure to Canadian market. Number 3, well, as I mentioned previously, with Canada being bubble territory, and what we've seen now in this last 6 months, which rising interest rate has really tapered the market off in Canada, anywhere from 20 to 30%, reduction in valuations in most Canadian markets has been happening. So again, as an investor, another reason to consider the U.S. Number 2. Landlord laws. So let's talk about that for a moment. Landlord laws. I've been investing in Ontario for over 10 years. I know the challenges many of you face being in a rent-controlled market, being in a market where the price points are high, and specifically, like, the laws are so much more in favor for tenants in Ontario that once they're in, very difficult to get them out. If they don't pay rent, very difficult to get them out. They do damage to the unit, very difficult to, get any sort of compensation. I've gone through an eviction process over the last few years on a property in Ontario. It's taken me close to 2 years to evict the tenant. I've gone through all those challenges. I know what it feels like. Versus the US, yes, there are markets similar, like where I live in California, very similar to Ontario. However, there are plenty of other states which operate completely different, which are much more landlord friendly. I want to pull up this slide specifically. So you've got these red states, which are landlord friendly states. What does that mean? Well, I'll give you an example. The state of Arkansas, in Arkansas, not paying rent is a criminal offense. You could actually send someone to jail for not paying rent. That's how polar opposite in comparison to Ontario, Arkansas is. The rest of these red states, as you see here, are landlord-friendly states. And what does a landlord-friendly state mean? Well, it basically means that you have much more control of your property than the tenant does. If the tenant stops paying rent, you can evict them and evict them quickly. If the lease is expired, you don't have to renew the lease. There's not as constant, endless continuity of the lease. The lease expires. Thank you very much, Mr. Tenant. I'm not going to renew your lease, and so forth. Think of that. If you have that kind of an opportunity, how you can plan and strategize and implement like burst strategies and whatnot in comparison to the struggles you have in a rent controlled market. If you know you can buy this 15-unit building that's got in a landlord friendly state, think about the planning. Well, I know I got 4 leases coming up for renewal in the next 4 months. Well, you may approach those tenants and let them know you're going to be raising rents to market. If not, they're not going to be renewing their leases. And then if they leave, you go in, do the rentals, and hit market. So it's much more predictable in comparison to a rent-controlled market, or a market where you cannot evict tenants, or a market where it's just this endless continuity of their leases. So some of the ones here, the more popular ones: Texas, Florida, the Carolinas, Alabama, Ohio's on there. Interesting enough, Arizona actually should be red as well, but it's not on this particular chart. But these are probably some of the first states you want to consider. However, I always premise that by saying people are making money and losing money in every state. So that shouldn't deter you from potentially looking at a deal in North Dakota or in Kansas City. No, I mean, ultimately, if it's a good deal and it makes fundamental sense, you may want to pursue it. But these are, again, some of the states which I always bring up. Why? Because you have quick eviction times. These are states where you can evict people within weeks, not months or years. All right. These are states that have no limits on security deposits. So you can, in essence, say, all right, your rent's $1,500 a month, but you may want $3,000 or $4,000 for a security deposit. There's no cap on that. There's no cap on late fees. There's no rush to give back a deposit. So in turn, you can give back a deposit. Once they move out, if there is the damage, you may apply their deposit towards it. And then if there's anything left over, you return it. Again, think about environment. As a landlord, you have the control. No rent control and no lease continuity. Beautiful. Another consideration, property taxes. I like this slide because as an investor, you want to consider property taxes. So this chart here showing the top states that have the lowest property tax and the top 10 states with the highest property tax. Why is that important? Well, if there's a considerable difference between the lowest and the highest, that's part of your underwriting. That's going to hit your bottom line. So you've got a market like Hawaii, which has got 0.28% property tax rate, versus something like New Jersey, which has 2.5% rate. That is a huge difference when you apply that to millions and millions of dollars of purchase price. So again, this is important for you as an investor. Start stacking things in your favor. Let me consider a landlord-friendly market. Let me consider a low property tax market, and start putting those together as you're looking for opportunities. My personal favorite states to consider investing in, and ones I have experience in, are these 5: Florida, Texas, Arizona, North Carolina, and Ohio. They're not always the most sexiest states. However, that's where I found some great opportunities, and also the resources. It's very important for you to create your power team. I mean, this probably goes back to very early on your investing journey. You need to start creating your power team. And what does that constitute? Your real estate lawyer, your real estate agent, but investor-friendly agent, your investor-friendly accountant, and your property manager, contractors, insurance agents, all investor-friendly ones. Well, the same thing as you're investing in the States, you want to start creating that power team. And for me, I've been successful in these particular markets. So it's helped me. versus someone else may have success in, let's say, Alabama. Why? I mean, for the opportunity, but also potentially because they have a strong team there. So in terms of myself, who am I? As I mentioned, we recorded a separate video. Go check out that video. I can share, it talks a bit more about my past, my history in terms of investing in real estate. But I'm not just an investor. My faith is a large component of who I am. I'm also a husband. I'm a father of 3 kids. I'm a friend, I'm an investor. I'm a coach, a realtor partner, and a learner. I don't pretend to know everything, folks. I'm not a CPA. I'm here to share my experience and everything I've encountered and done in real estate. But I don't pretend to know everything. I'm a learner, folks. I'm a learner. I'm at a certain interval, and you may be ahead of me or behind me. It doesn't make me better or worse. This is where I am in my point in my life. And you are at a different interval. And this is just, we're talking about real estate investing, but you may know another subject matter much better than myself. But ultimately, I just want to encourage all of you, your self-worth is not how large your portfolio is, all right? So this particular slide is something that's close to my heart because, all of us have a tremendous amount of, experience and value. And it's not all based on how many doors you will have or how big your bank account is. All right. So again, if you want to know more about me, you can go check out that other video that we recorded. This is my wife and my kids. We've got 3 kids. Our youngest was born in the last during COVID. She's about just under two years. She's gonna be turning 2 in January. Those are my parents. I enjoy playing soccer and so forth. So there's a tremendous amount of, this presentation here can go on for a long time, but in terms of some additional background, I was hosting monthly workshop pre-COVID here in Southern California, basically educating the audience on investing in real estate. I've been on different people's podcasts. I have my own podcast where I was interviewing people in the industry. And again, it's always coming from a point of contribution in education, property tours, and so forth. These are some of the states that I have experience in. But again, there's a tremendous amount of things that we could talk about today on investing in the U.S. I felt that let me bring up a few slides. We can talk for hours, but I just want to kind of land on this particular slide before ending this particular video. But I think 2 of the most common concerns or hangups for most Canadians is taxes and financing. So when I sit down with a client, I kind of help them analyze, stop looking at properties. That's step 3 or 4. The reality is you need to get a handle on your tax situation and the structure of how you're planning to move forward on investing in the US. So you really want to have a conversation with a cross-border CPA, and they will be able to help educate you, but also help set you up. Everyone's scenario is different, so there's not one way that fits for everyone. And a lot of it's based on your goals. Some people's goals are to own 1 property in Florida and go to it a couple times a year, versus someone else has a goal of creating a massive portfolio in the US. So based on those 2 goals, there's going to be completely different plans and a setup for them. So your CPA will be a key component of that, help educate you on the tax consequences, how to mitigate double taxation and so forth. And yes, there are many ways to do that on creating a US entity, the type of entity, an LP or LLC, versus other entities like a limited company and so forth. So again, the cross-border CPA is going to be huge. Also, a cross-border attorney who understands how to set up these corporations and the rules in place. If you guys are planning to raise capital, that's a whole other conversation. You have SEC compliance considerations that you need to know. So that's a particular type of attorney you need to speak to, and there's a whole other package of information called a private placement memorandum and a subscription that needs to be created for that. Much more costlier, But again, all that stuff is important because it's going to protect you in investing and raising capital and making sure you're doing it correctly. And finally, financing is probably the number 2 challenge for non-residents, for Canadians to invest in the US, mainly because you don't exist, in the US system. The reality is most non-residents will not have a US credit score. Most non-residents will not have US tax returns. Most non-residents are not generating income in the US. So because of that, the standard way of underwriting and qualifying an individual for a mortgage is not going to be there. However, there are programs and products in place for foreign investors that are available. So that's something that I educate my clients, and you basically, once you know, then you're able to navigate accordingly. But at a high level, there are products for Canadians, mainly between 1 to 4 units, where you can qualify easily for the mortgage. It may require a little bit more money down. The rate may be slightly higher than the American. However, it would allow you to get the appropriate financing for your investments, for your purchases as a non-resident. All right. So again, it's about finding out, getting the knowledge, the education, taking appropriate action. None of us know what we don't know. So you need to find out. Learn, and then execute. But the ability to invest in the US is there for you. You can invest in the US, and I want to encourage all of you to consider investing in the US. Hopefully this presentation, I know I went quick, and there's a lot of conversation, there's a lot of points I brought up, but hopefully you guys found some value in that. At the end of the day, this is just whet your palate to consider investing in the US as a Canadian. I'm telling you folks, going forward, I'm getting very excited. The market is shifting. I think there's going to be a tremendous amount of opportunity. And for Canadians, you really want to factor in the US. You really want to explore what the US has to offer, and probably want to diversify and start investing in the US. But you really need to know how to do that. So through this video, hopefully I've imparted some value to you. In terms of, for myself, you can reach me on social media. I'm most active on Instagram. I've created a recent YouTube channel, and also on Facebook and LinkedIn. But if you reach me on Instagram, most times it's me responding directly. So I'm happy to kind of like respond to some of your questions, set up a one-on-one session that we can explore further. And I also do coaching, as I mentioned earlier, through Wealth Genius. So if that's something of interest to you, reach out to me. Thomas Lorini, Thomas_Lorini1 is my handle on Instagram. Reach out to me. We'll set up a time to talk more. I could tell you a little bit more about my coaching program through Wealth Genius. But again, folks, I'm happy to be here today. I'm excited, and it's awesome. It's awesome just to have this opportunity to impart what I know to you here today. All right. Until next time, all the best. Looking forward to it. Take care.